Hello everyone, thank you all for joining my presentation today. Let me just start by introducing myself. My name is Veronika Dyna Novita, you can call me Vero. I'm a student of Sugisha Pranata Catholic University, Semarang, majoring in accounting department. I'm in the first semester now. Today, I'm going to present a journal article summary entitled Financial Performance Determinants of Organization The Case of Mongolia campaigns. Let me introduce the outline first. My presentation divided into three major points. First, I will describe the introduction and the literature review of the study. Then, I will explain the methodology and the result of the study. Finally, I will give you the conclusion of the study. My presentation will not take more than 10 minutes. If not, all important information on the PowerPoint slide. Please save any question at the end of the presentation. Let's consider the topic into detail. I'm going to start with the background of the research. Cost-sheeting, globalization, competitive among the campaigns are become severe. However, it is important to examine the financial performance determinants of a company. It is impossible that every sector has the same determinants. Science, they differ by their operation and character. Therefore, the main purpose of the research is examining financial determinants of Mongolia sector, comparing and explaining the result. Even though there are many external factors, such as income per capita, inflation, and unemployment rate. External factors are beyond the scope of the study. For this study, campaigns are divided into 6 sectors: food and grocery, production of construction, meaning agriculture, trading, service, and miscellaneous. Company performance is the measurement of what can be achieved by company with show good condition for certain period of time. The purpose of measuring the achievement is to obtain useful information related to flow on fund, the use of fund, effectiveness, and effectivity. That's all about the background and the literature review of the research. Let's move on to the data, variable and research methodology. Stock exchange was established in connection with the transition period from a centrally planned economy to a market economy in Mongolia. In this study, ROA, ROE, and ROS are used as independent variables representing financial performance. Will ration what expense grow, capital structure, liquidity, and profitability are chosen as independent score variable. The VIG-FX model is appropriate specific if we are focused on a specific set of end firms and our inference is restricted to behavior of 10 set of firms. Will the random effect model is a appropriate specification if we are drawing an individual randomly from a large population? Fixed effects or random effect models. Whichever is appropriate will be used to find the result based on the Hausman specification test in the study. Three ratios are used as dependent variable: ROE, ROA, and ROS separately, and their results are examined to determine the financial performance impact for each of 6 sectors. I'm now approaching the end of my presentation. Finally, I'd like to discuss the conclusion of the research. The aim of the study is to investigate the impacts of profitability, growth, liquidity, and capital structure on the financial performance of 6 major sectors in Mongolia, and evaluate if there is any difference related with each sector. The paper used the panel regression to examine the financial performance determinants for Mongolia's 6 sectors. The Hausman test is used to decide using either fixed effect or random effect model. ROA, ROE, and ROS are chosen as dependent variables. Out of 13 independent variables, growth in profit, quick ration, current ration, and growth in asset. It shows that liquidity and growth cannot explain financial performance. Generally, return on cost was one of the most essential determinants which have a positive significant impact on the food and grocery, construction, mining, and service sector. After that, the earning per share is the important variable, which is seen as a determinant for the food and grocery, construction, mining, and agricultural sector. From the result, we conclude that capital structure, cost structure, and profitability are the determinants of financial performance in Mongolia. Moreover, there are some determinants connected with certain sectors, such as long-term debit to total asset ratio is significant for the mining and agriculture sector, while short-term debit to total asset ratio is the determinant for the service sector only. Short-term solvency is fundamental for the food and grocery, agriculture, and service sector connected with their life. Well, I think that's all for today. Are there any questions? Thank you for attention.